In the last 48 hours, the stock market just suffered its worst day since October. Bitcoin dropped below 62,000. And if you're watching this, you probably felt it. This is not a normal correction. This is a shift. Stay with me because what happens in the next 24 hours could determine your entire portfolio for the next 6 months. What's up, everyone? This is your daily market breakdown. Today, we're breaking down the new market reality. What just happened, why it matters, and exactly what you need to watch for tomorrow. By the end of this video, you're going to understand the 3 forces that triggered this week's collapse, the key price levels where the next bounce or breakdown could happen, and whether now is the time to buy or step back. Let's go. All right, first things first, let's talk about the damage report. This week was brutal. Not just bad, brutal. The S&P 500 dropped 2.6% in a single day. That's the biggest move since October 2025. The Nasdaq down 4.2%. That's your mega cap tech stocks getting absolutely hammered. Here's what happened in the tech space specifically. Nvidia fell 6.2%, Broadcom dropped 7.9%, Meta down 5.5%. And it wasn't just the mega caps. The entire semiconductor sector got obliterated. Micron Technology down 6.3%, AMD down 6.3%. Marvel Technology lost 8% in a single session. But here's the thing, it's not just stocks. Your crypto portfolio is screaming. Bitcoin, which started this week around 73,000, is now sitting at 62,000. That's a 15% decline in 5 days. Ethereum collapsed from 2,000 to 1,700. And Bitcoin is now officially having its worst week since February. The crypto ETF situation is even more telling. Spot Bitcoin ETFs just recorded $2.97 billion in outflows over 10 consecutive days. That's institutional money leaving. That's hedge funds taking chips off the table. That's the market saying we're done for now. But here's what everyone gets wrong. This isn't random panic. This isn't retail getting shaken out. This is something bigger, and if you understand what's driving it, you'll know exactly what to do tomorrow. Let's talk about the 3 forces that created this perfect storm. Force number 1, the jobs report. Last month, the US economy added 172,000 jobs. That sounds good, right? It's not good for the market right now. Why? Because the Federal Reserve is watching that number like a hawk. A strong job market means inflation stays sticky. A sticky inflation number means the Fed doesn't cut rates. It means rates might even go higher. And here's what nobody talks about. We've been living in a world where interest rates were going to come down this year. Every Wall Street analyst was pricing in cuts by fall. That narrative supported tech valuations. That narrative justified paying 40, 50, 60 times earnings for a software company. But the moment that narrative breaks, everything reprices. The market is now pricing in a rate hike later this year, not a cut. A hike. When that happens, the highest valuation stocks, your Broadcoms, your Nvidias, your Metas, they get hit the hardest. Why? Because their future earnings are worth less when you discount them at a higher rate. Force number 2, geopolitical tension. We've got US-Iran conflict escalating in the Middle East. Peace talks have stalled. When geopolitical risk goes up, money flows out of high-risk assets like crypto and into safe havens like bonds and gold. Bitcoin is getting hit specifically because it's the most risk-sensitive asset in the world. When risk goes up, Bitcoin is the first thing people sell. Force number 3, and this is the most important one. Valuations were stretched. The Magnificent 7, your Mag 7 stocks, had gotten to levels that made no sense without perfect execution and perfect interest rate conditions. Nvidia, after its 20% gain in the first 5 months of the year, was due for a pullback. The market was just looking for a trigger, and the jobs report gave it one. Here's what makes this different from a normal correction. This isn't about earnings. This is about repricing risk. And repricing risk is violent and unforgiving. Let's zoom into crypto because this is where we're seeing something genuinely new. Bitcoin is testing support around 60 to 62,000. If that breaks, the next target is 55,000. Ethereum is testing support around 1,650. If it breaks, you're looking at 1,400 to 1,500. But here's what's interesting. Not all crypto is getting hit the same way. Yes, Bitcoin and Ethereum are down, but look at what's happening in the altcoin space. Stellar, XLM, just surged 40% after the DTCC chose its network for a tokenized securities platform. WorldCoin, WLD, up 14%. This tells you something important. The market is still rewarding narrative. It's still rewarding utility. It's still rewarding the idea that blockchain will integrate with Wall Street. The sell-off isn't crypto is dead. The sell-off is risk is off. So we're cutting the speculative garbage and holding the names with real use cases. That's actually a healthy market dynamic. That's not capitulation. That's rotation. Now, institutional response. The crypto ETF outflows are big, but here's the context they're not talking about. Spot Bitcoin ETFs took in $13 billion earlier this year. So we've given back about $2.97 billion. That's significant, but not catastrophic. It's like pulling back 20% of a year's gains. That's normal. That happens in every bull market. The key metric to watch is, do those outflows accelerate? If we go another week and we see another 2, 3, 4 billion in outflows, then we're looking at a deeper institutional capitulation. If the outflows slow, if they plateau, we're actually on the verge of a bottom. And here's the crucial part. Bitcoin and Ethereum always lead the crypto market down, but they also lead it back up. If you see Bitcoin stabilize above 60,000 tomorrow, you're probably looking at the bottom. If it breaks 60, then we need to see support hold at 55 to 56,000. Let's talk about what to watch for tomorrow in 3 buckets. Bucket 1, crypto price targets. Bitcoin, watch 62,000 and 60,000 as support. If we hold those levels and bounce, bottom is in. If 60 breaks, target 55,000 to 56,000. Resistance above is 65,000, then 68,000. Ethereum, key support at 1,650, then 1,500. If we bounce from here, resistance is 1,800, then 2,000. These aren't random levels. These are areas where previous bounces have happened, where contracts are getting liquidated, and where smart money will be hunting for bids. Bucket 2, stock market levels. The S&P 500 is at 7,383. The big question, does it close the gap down to 7,200 or 7,300? Every big move down has a level where it stops. We need to find that level. If the market bounces tomorrow and closes above 7,450, we're probably looking at a relief rally that could go 7,500 to 7,600. If it breaks 7,300, then 7,000 is not out of the question. The Nasdaq needs to hold 25,700. If it does, we get a bounce. If it breaks, we go to 25,000. Bucket 3, individual names to watch. Nvidia, this is the bellwether. If Nvidia holds 135, you might see a bounce. If it breaks and closes below 130, that's a signal that the selling isn't done. Broadcom, similar situation. Watch 200 as support. Meta, this one's interesting because they announced a massive AI capex program. The sell-off might be overdone here. Watch 500 as support. And here's what most people miss. Tomorrow morning before the open, watch the Asian markets. Watch the Japanese Nikkei and the China markets. If they're down another 3, 4%, that's confirming the risk-off move is still happening. If they bounce, it signals we might be stabilizing. Here's the reality of the new market environment. We're in a transition. We've gone from a world where the Fed was cutting rates and tech valuations were expanding to a world where the Fed might tighten and valuations are contracting. That's a big shift. It takes time to reprice everything. For crypto investors, this is actually an opportunity if you're thinking long-term. Bitcoin at 62,000 is cheaper than Bitcoin at 73,000. Ethereum at 1,700 is cheaper than Ethereum at 2,000. The question isn't, is crypto dead? The question is, what price do I want to own it at? If you believe in the thesis long-term, corrections like this are where you build positions. For stock market investors, same thing. The panic is real, but panic creates opportunity. However, and this is critical, don't catch the falling knife. Let the market show you where it wants to bottom. Wait for a bounce, wait for confirmation, then act. The new market reality is this: volatility is back. Risk management matters again. You can't just throw money at the Mag 7 and expect to double your money. You actually have to think about where you're buying, why you're buying, and what you're going to do if you're wrong. If you're holding through this, stay strong. If you're looking to buy, be patient. The bottom will be more obvious when we get there. Make sure you hit that subscribe button. The market is going to be violent over the next few weeks and you're going to want the updates. Drop a comment down below and tell me, are you sitting this out or are you hunting for the bottom? I want to know what you're thinking. This is not financial advice. Always do your own research.